Hey, what is happening, Bulls and Bears? We are back, and yes, we have a lot of good information to get into today. The economic meltdown continues. We every day I continue to see more stories that point to the same conclusion, and that's that the economy is falling apart. It's deteriorating. It's an economic decline that's continuing. It's a financial crisis. The scary part is, I used to say 99% of the people didn't realize it. Now, with the banking crisis making the headline news and pretty much everyone knowing what's going on with the banks, I don't think they know how bad it is. And I don't think they know that this is the tip of the iceberg. But now, instead of 99% of the people not knowing, what's going on with the economy, with the financial sector, I think it's more like 91%, right? I think there's a lot of people waking up to what's going on. People are finding out that the banks don't have the money in deposits that they loan out, and people are learning, and people are, scratching their heads like, why is this allowed? Why did the regulators allow this to happen? How did everyone drop the ball? How did nobody see this? Well, it's not that they didn't see it, it's that they didn't want to do anything about it. Because if you stop the way banks operate, the entire economy comes crashing down. Why? Because the economy, what we're told is economic growth, is based on people taking out loans, spending money they don't have, and that's chalked up as economic growth, right? So put two and two together, you have to realize that without the system of lending that we have right now with banks, you wouldn't have the same economy that we have. Everything would come to a screeching halt and basically crash, and you would see thousands of times more layoffs than you see right now. Speaking of layoffs, here's a headline that caught my eye. UBS, remember, UBS bought Credit Suisse, or Credit Suisse as some call it, is preparing to eliminate 20 to 30% of jobs worldwide. 20 to 30%. So on one hand, people that worked at UBS were probably like, yeah, we're growing. We bought Credit Suisse. We're expanding. Then they get the layoff announcements. Wow, 20 to 30% of jobs worldwide. So what does that tell you? Was that a bad acquisition to get Credit Suisse? I think so, especially when you look at the derivatives exposure. We talked about that a few reports ago about how these banks, some of the big mega banks, have more derivatives exposure to debt than the entire U.S. national debt, more than $30 trillion. Several of the big banks. Take a look at that report that we put out a few days ago, and if you want to get more into that. UBS is expected to announce 36,000 job cuts across its branches. Wow, that includes 11,000 over in Switzerland. UBS and Credit Suisse employed about 125,000 people at the end of 2022. The layoffs are not slowing down, folks. In our previous report, we talked about McDonald's. Now, the interesting part, I don't think I mentioned that in my last video, they closed their corporate offices to announce the layoffs. They closed their corporate offices to announce the layoffs. But why would you do that? So you want people, instead of being in the office, you want people to be at home when you announce the layoffs. Why? Is that because they might trash the office because they're going to get so upset? It doesn't really say in the articles that I've been reading, but it's really interesting to see about a company shutting down, temporarily shutting down, to then be able to announce layoffs. So that's one thing I can think of. The other thing is that we don't have a lot of the drama in the office when someone gets the layoff email and then someone next to them didn't get the layoff email. That could cause a lot of drama. So I think it's to avoid a lot of drama. Why else would they close down their offices temporarily to announce the layoffs? I mean, please let me know what you think about that down in comment. The next piece of news here I want to get into produces 4,000 Model Ys in 1 week. Tesla achieved production of 4,000 Model Y vehicles last week in Austin, Texas. They were celebrating. So why are they ramping up the production so much? Do they see possibly a credit crunch coming down the road and they want to get as many vehicles sold as possible before the credit crunch really hits? Speaking of credit crunch, we're seeing some headlines here that are telling us that banks may not be so confident that they're going to be rescued. U.S. bank deposits dropped, as we know, since the big announcement of the failed banks, but lending also dropped last week. In fact, the decrease in overall lending was the largest since June 2021, almost 2 years, the biggest decrease in almost 2 years. And we've asked the question here, are the banks going to be pumped with so much liquidity from the money printer that they're going to ramp up lending in order to keep up with these bubble prices, or is there going to be a credit crunch, meaning they're going to be giving out less loans? It's going to be harder to qualify for loans, not just because of higher interest rates, but because of everything happening with the uncertainty with the banking. We know that Janet Yellen came out and she kind of talked out of both sides of her mouth, or she was contradicting herself a little bit. At first, she said there's not going to be any blanket bailouts for all depositors across all the different banks, including small banks and regional banks. Then she said we'll have to take a look at it and come to a decision if the banks are considered systemically important, or if the bank's failure would cause a risk of contagion throughout the entire financial system. Then we would look at covering those banks. But that's not leaving people with very much confidence. And actually, the banks, I don't think, have very much confidence either in what's being said, because why would they pull back so heavily, so drastically on the lending? The biggest pullback since 2021 in June there. So very interesting things happening here. Things are continuing to unfold and point to the obvious conclusion, I think, for all of us here, that this economy is headed down into a danger zone here. Let's talk about gold and silver for a minute here. As most of you know, I'm a big proponent of precious metals and stacking and what I consider to be real money compared to the fiat digits on a screen that they can click a mouse and create $1 trillion. Think about that. We have to work for our money, most of us anyways, and most of us will work our whole life and never make $1 trillion. I'd venture to say most people on this channel, most people in the world, but we have people out there that can create $1 trillion at the click of a mouse. How insane is that? Right? You and me, we're going to work our whole lives and never make a total of $1 trillion, a whole life. Add it all up, it's not going to be $1 trillion. But they can create $1 trillion at the click of a mouse to send wherever they want, to send all over the world, to bail out billionaires. If we look at Silicon Valley Bank, all the billionaires that were made whole or reimbursed for the money that they had, even though a lot of companies and individuals alike had deposits of more than $250,000. And people, I think that's another thing too that's waking people up. People are seeing this, the billionaire bailouts, as I called them. The day after that happened, I called them billionaire bailouts. And now I've seen other people use the same term here across social media and even one of the major news networks. I'm not saying they got it from me. I'm just saying that's a pretty good way to describe what happened there. People, at first, they said, no, it's not a bailout. But really, when you give somebody money that they normally would have lost, I consider that a bailout in the traditional sense. All right, but let's talk about this. Gold, silver here. Gold up to 1996. It did get past 2000 for a while, pulled back a little bit. Silver, $24 as I'm reading this. Remember, silver was in the $17 range just a few months ago. And if you would have bought there at that time, people say silver's not doing anything. That's not true. If you would have bought then, you'd be up, what, almost 40% right now? Is that what it is? From about $17 to $24. I have to check my math, but I believe it's close, maybe just under 40%. Pretty good gains here. Let me see how recent this was here. And I think most of you know what I feel is going to happen. I feel that ultimately precious metals are going to be the new monetary system here after this failed digital currency comes out this summer, which is coming out in just a couple months actually. They're implementing the infrastructure or the platform for this with the Fed Now platform coming out this summer. Silver, let's see here. You could have got it for just under $17.80 back in August 2022, so less than a year ago. And it's got a huge upside potential. I believe that at some point, silver is going to be equal to the price of gold. Yes, that means $2,000 an ounce approximately or more, because silver has so many more industrial applications compared to gold. I think the price has been suppressed because central banks, for one, are accumulating it. And of course, they want to accumulate it at a lower price, right? If you wanted to stack up on a whole bunch of something and you had the ability to stamp the price down or suppress the price on the papers market, wouldn't you do that? Well, yes, I think you would. That would be the logical thing to do. What's been happening with central banks? Every time we look at it, we see another record buys from central banks, and we know that the price is being artificially suppressed. And look at the disconnect now between the paper price and the physical price. Try to buy an ounce of silver now for $24. You can't do it. Of course, there's going to be a little bit of a markup because dealers, brokers, bullion dealers, etc., have to make their profits, coin dealers. But the gap is getting bigger and bigger. It's hard to find it now for under $29. And you're going to see that separation continue unless they stop manipulating the price to the downside. And I think ultimately they're going to stop manipulating it because they're going to want to see, and I'm talking about the banks here, they're going to want to see the true value of the assets, of the goods, of the metals that they've been accumulating now for years. So obviously they're not going to let the price stay low forever. And when it gets unleashed, it's anybody's guess how high it can go. I think it could be in the hundreds of dollars overnight. I think we could wake up, it's going to be silver $100 and then to the moon from there. By to the moon, I mean, I think thousands of dollars for silver at some point. Many people think that sounds crazy, but look at what the 1980s, we had a high of $50 an ounce silver. It's 40 years ago, and now we're at less than half of that still. So obviously there's some serious suppression, manipulation, tamping down to the price that's happening here. And my thought on that, I do recommend buying physical silver. I have a sponsor that's 401k accounts with precious metals, which I have allocated some of my retirement funds into just to be more diversified. And I think everyone should at least take a look at doing that and think about your personal finances here. And we have a lot of bubbles that still need to really deflate much more than they already have. Commercial real estate loan defaults now surged to a 14-year high. And that's not just bad for the borrowers, it's bad for the banks. The jump in distressed debt could prove ominous for landlords and banks that loaned to them. All right, folks, so things are going to get real this year, and I hope you're prepared. I hope you're stacking both survival. People always say, "Oh, you can't eat silver, you can't eat gold. Why would I stack those things?" Don't just stack those things. Be diversified in your preparation, just like you would be diversified in your finances. Have several months of food available, fresh water. I'm not saying your faucets are going to get shut off. I mean, if you drink tap water, that's kind of a scary thing to me, but to each his own. I would say have food and water readily available. You may not be able to get it at the store. And have your water filters going. I use Berkey filters myself. Plus, I buy filtered water from a local water store where I don't want to use my Berkey for all the filtration because it takes a long time and you have to use a lot of filters. So I also buy filtered water at a store. And remember, the stock market is completely detached from the real economy. You could have half the population filing bankruptcy and the stock market would still go up. And then even if the stock market does go down, look at 2020 when the health crisis came out, we saw a big crash of about 40%. And it took just a few weeks for that to jump from the gutter back up again. And here we are now near all-time highs. I don't think we're going to pass the all-time highs that we saw at the end of 2021. But any stock market crash or sell-off can just be pumped up with click of a button, funny money injection, right? So that's why I really don't talk about a stock market crash too much. It could happen. If it does, I think they'll just pump it back up with more funny money. And that'll be a good buying opportunity, actually, too, if that happens. All right, folks, we're going to wrap it up here. Thanks for being here. Keep stacking. Bye for now.